This module is about the recording process and how to remember what is a debit and what is a credit. To understand this module, you need to have a solid understanding of assets, liabilities, owner's equity, including the subcomponents of revenue, expenses, and common stock, retained earnings, and dividends. If you need that understanding, check out my other videos or send me a message. I'm a fan of ways to remember things, and since the accounting cycle is a repeating set of steps, it helps to have a mnemonic. Our first mnemonic is for the accounting cycle, and the sentence I like is tasteless, jolly telemarketers accept boring fashion. Using the first letter of each word, we have the cycle. The transaction first occurs. Entries are journalized. The entries go in the general journal and are posted to the general ledger. And we'll talk about that in a minute. The balance in each of the general ledger accounts is used to prepare the trial balance. The purpose of the trial balance is to show that all debits equal credits and help make proper adjusting entries. Next, we make those adjusting entries in the journal and post them to the general ledger. From there, we prepare an adjusted trial balance and double-check the balances are correct. Finally, we prepare the financial statements. I mentioned the general journal and the general ledger. There are more journals and ledgers, but we'll talk about the general journal where everything can be recorded. The way to remember the differences is to think about when you were in school and you had to journal. The same is true in accounting, where you journalize what happened. The journal is where the transactions, or what happened, are recorded. So we'll talk about how to do that in a moment. But in this example, you see the words cash and common stock. So while the journal records what happens, there are times when we just want to know how much cash we have. The journal doesn't show us that. So how do we know the balance of cash or of any other account? The transactions that happen in the journal are transferred, we call it posted, to the general ledger. The ledger has a separate listing of each account, and there is a constant updating of the balance in each account. You can look at the ledger, see the balance, and wonder why there is a change of $10,000. From there, you can trace the information to the journal and see the related transaction. We said the accounting cycle starts with a transaction, and the transactions are journalized to show what happened. Think back to your beginning in accounting when you had several columns, and the equation was maintained for each transaction. When you did that for each row and in total, the accounting equation of assets equals liabilities plus owner's equity was maintained. The issue with this type of analysis is it can get out of hand. There are companies with 100 accounts, so there would be 100 columns. And there has to be a way to record the transaction, maintain the accounting equation, and not get lost in all the columns. You've heard about debits and credits, but I can't tell you how many students have the wrong preconceived idea about them. So forget everything you've ever heard except that debit means left and credit means right. That's it. Don't give any other value to those words. One isn't better than the other. And that is especially true because, like the accounting equation, it has to balance. One isn't better than the other, so much so that they're equal. The total debits must equal the total credits for each transaction and for the total of all accounts. To make that happen, we use the double entry accounting system. For each transaction, there has to be 2 or more accounts affected, and the basic accounting equation must remain. We're going to record these things by debiting at least one account and crediting at least one account. The total of debits must equal the total of credits. The trick is to remember which accounts are increased with debits and which accounts are increased or decreased with credits. Enter Dead Coil. I wish I knew who thought of this because I like to publicly thank them. Dead Coil is a mnemonic to remember the normal balance and what is done to increase this category of accounts. D is for debit. The other letters are E for expense, A for assets, and D for dividends. With COIL, C is for credit, and the other letters are O for owner's equity, I for income, and L for liabilities. The debt accounts normally have a debit balance, and that is what you do to increase them. For example, cash is an asset. Assets have a debit balance. If I have a transaction that increases cash, I would debit cash. So of course, I would credit cash to decrease it. Likewise, sales is an income account, and income accounts have credit balances. I would credit sales to increase it and debit sales to decrease it. Here is a summary of how to account for transactions, and we're going to talk about the transaction of investors putting $10,000 into a company in exchange for common stock. First, you analyze the transaction. Remember, like the tabular analysis, there needs to be at least two accounts affected. In this case, cash and owner's equity were affected, and both increased. Cash is an asset that increased, and assets are debited when they increase, so cash will be debited. Common stock is an owner's equity account, and it has a credit balance and is credited when it is increased, so it will be credited. The journal entry is a debit to cash. You can see the date of transaction in one column. You can see the word cash is to the left and directly next to the line. All debits are on the left. You can also see $10,000 is in the left column for dollar amounts. The credit to common stock has the word common stock slightly indented. This is not a separate column. It's a simple indent. However, the $10,000 dollar amount credit is in its own column, and as credit means right, it's in the right column. All debits would have to be to the left, and they're listed first. All credits are indented, and they follow the last debit. Then, under those, you see an explanation of what happened. This is for the reader to know what happened if they look back at the transaction later. We don't want anyone to think it's part of the journal entry, so it is in parentheses. Finally, we take the debit to cash and credit to common stock and post it to the ledger. I'll show a better ledger in a moment, but for now I put in T accounts, and you can see the $10,000 on the left for cash showing the debit, and you can see the credit to common stock with $10,000 on the right. This is a quick slide on T accounts, since they're used so often and are a quick illustration of accounts. It's a simple listing of the account name with debits on the left and credits on the right. Here is a T account after several transactions. The numbers on each side are totaled. If the debit side is larger, the credit side is subtracted from it and the balance is a debit, like shown here. Likewise, if the credit side is larger, the debit side is subtracted from it and the balance is a credit. Here is an example of an actual ledger. You see the date. In this example, the description lets you know where the transaction can be found. Oftentimes, there's a separate column with this information, and the description is a copy of what's in the journal, or it's actually left blank. But from here, you can see the debits and credits along with the running balance. You have to know what the balance would normally be, as in cash normally has a debit balance, so it's shown as positive. The only time the balance would be negative is if it had a credit balance. The opposite is true for credit balance accounts. They are also shown as positive and only shown as negative if they have a debit balance. This module doesn't have the final steps of the accounting cycle in detail, but you can certainly figure them out. After you post the journal entries all year, you prepare a trial balance from the balances that exist in the general ledger. That information gives you all the information you need to journalize and post your adjusting journal entries. From those general ledger balances, you will prepare an adjusted trial balance. And finally, you prepare the financial statements. So the summary for this module is to remember the accounting cycle, tasteless jolly telemarketers accept boring fashion. Remember the accounting equation, assets equals liabilities plus owner's equity, and that debits and credits mean left and right must equal each other in transactions and in total. Remember dead coil, and remember when you're posting your journal entries, all of your debits are first before your credits, which are slightly indented. I hope this helps. Let me know if you need anything else.